Welcome to the Real Estate Jam Session. Man, we got a great show for you today. We're going to be talking about mistakes new investors make and how to avoid them. My guest today is Brian Adamson. Brian has been a real estate mentor for a lot of years. He also runs iFlip University. And so he does this every day. So he can kind of walk us through what we should be looking for, what we should be watching out for. A lot of great tips and advice. So make sure you check out the video, and while you're there, if you haven't done so, make sure you subscribe and give the video a like. Now, if you're new to the channel, my name is Joe Killinger. I've been a real estate entrepreneur for 20 plus years, and I do this channel to really help others take from my experience along with my guest experience on what's worked for us and what we've failed at. So there's pretty good balance there. So you can learn a lot by checking out this channel. So while you're up there, again, make sure you subscribe, give us a like, and we put these videos out every Tuesday and Thursday at 2 p.m. PST. So check them out and come back quite a couple times a week. Brian, thank you for coming on the Real Estate Jam Session. I really think you bring a lot of value to our viewers that are really wanting to become a real estate investor. I think we can really walk them through some of the things that you and I have done that have worked well and things that have failed for us. I know I've had a significant number of missteps because I didn't really have a mentor. So I think what you're doing is really powerful and could really help a lot of people. And so thank you for coming on the show today.
Thanks for having me, Joe.
So new investors, how do we get them started? What are the biggest mistakes that you think that they should be looking out for right out of the gate?
So I think this has to be the movement: desire, education, practitioner, expert. Right? It starts with the desire. Right after that, you have to go get educated, and then you got to run reps. You got to take action. I think that we live in a society and such that people go out and get information, but information isn't knowledge. You know, the knowledge is the processes and the systems and the structure. And then you go out and you implement and you take as much action as you possibly can in that practitioner phase, and then eventually become an expert. So if you can do it the right way, which I didn't, and it sounds like probably you didn't either. Yeah. You know, I became a practitioner far before I got the education, and kind of went through the school of hard knocks that way. But I will really encourage people, man. You know, Warren Buffett says it best. You know, it's good to learn from your mistakes, but it's better to learn from mistakes of others. Go find somebody that's really been doing it and doing it at a level that you like to, and go and subscribe to them and find out how they do what they do.
Now, did you start with a mentor?
I did not. I started my junior year in college back in 2006 with a $7,000 refund check as essentially a private investor. Right. You know, this is retrospect me saying this, but yeah, that's how I cut my teeth. I got in on a deal where, you know, there was a buyer who didn't have the funds to buy a flip from my buddy. And I basically gifted them the money for the down payment. And when he flipped the house, he gave me a return on my investment. So that's how I got started. And then I started buying cash flow. And I did that for the first 8 years with no mentor. And I finally got to the fundamental ceiling of achievement to where I'm like, yeah, I'm missing something. And what I was missing was a mentor.
Yeah. Why don't you tell us some of the mistakes you made right off the bat?
In my early career, it was not planning properly, right? Mm-hmm. So not having any kind of rainy day fund for my properties. And, you know, I ended up having to get rid of about 90% of my portfolio because, you know, at the time when I bought them, when the market was compressed in 2008 to 10, I bought over 20 rental properties. And I just didn't plan. So cash flow was good until I started needing roofs and HVAC and all these things that I didn't do, just kind of went in and threw lipstick on them enough to get people in and paying. And I refused to be a slumlord. So I ended up finding investors who could take those properties from me. But had I had the wherewithal, I could have kept that same portfolio and had a $2 million exit in today's market. So, you know, ignorance is expensive and we just can't afford it, you know.
Those reserves are key. You know, I think, you know, now that you brought that up, as a new investor, and my first couple properties, I didn't either. You know, it was just, I didn't think like that. I thought, oh, this is going to be a good return. And I didn't think about, you know, we did the inspection. I guess I thought maybe they were going to last forever. It's been a long time ago. So, but, you know, reserves, you're right on. It's key.
Yeah.
You know, part of the due diligence. What was your next What else was other mistakes did you make?
So my next biggest after that was when I finally went and got mentorship, and I understood, how to fix and flip and wholesale at that point, raise private money. Had great success early on, went out, and bought 20 something flips my first year flipping houses and using other people's money as such.
Right.
But I didn't have solid infrastructure. And this is one of those things where you can teach it only so much until you have to go out and practice it, dealing with contractors. As you know, 90% of what we do is people oriented, and you just can't win without good people. And so, the unfortunate part about that, though, was the particular group that I was with, the coaches were really more or less salespeople. So as I started to have challenges, I was calling in and I was getting these kind of surface level responses. And so I was hemorrhaging money for quite some time in the process of really figuring it out. And, God kind of started sending people at the right time to pull me out and help me solidify some of this infrastructure and put some solid processes in place to be successful on the other side of it. But lost $500,000 in that process of figuring it out. Yeah.
That's a tough lesson, isn't it?
It is.
Now, do you recommend as a new, if you're a new investor and you're anxious to get started, do you recommend save your money until you do it on your own? Or do you think syndicate or go out and try and find investors, friends and family and that kind of stuff?
Yeah, I think save your money to invest in your education. And after that, go and use other people's money. There's a lot of people, I think that most people, especially coming into it, think, it's such an egregious thing to say using other people's money. But the reality is people, and we were just talking about this before we started the conversation, there's more money on the sidelines than there are good deals. And so people are looking for opportunities to passively invest in a competent operator, and a lot of people lead in with this fake confidence, but the more competent you become, the more confidence you will have. And when you can learn how to package and deliver those value add propositions to people, you'll be wildly successful. I see it every day with my students in my program coming off the streets and, raising capital within 60 days.
Yeah. Yeah. We talk to people and, they think, oh, I'm just going to go out and raise some money right now. And then you start breaking it down with them like, okay, well, how many deals have you done? Well, they've done one fix and flip, or they've done one, they bought a duplex or a triplex and they were Airbnb-ing it. And, if I'm a sophisticated investor, even if I'm a family member and you're a cousin of mine, you come say, hey, I've done this one deal, I want to really blow it out now. I'd say maybe we need to see a little bit longer of a track record.
Yeah. Yeah, absolutely. Absolutely. And that's for their protection and yours. As the operator, it's hard to stomach that at times, but and you and I both have had some expensive lessons to where I look back and I say, yeah, they were probably trying to protect me a little bit, know?
Yeah, I think so. I think if I'd had my first investment went very well. It was my second one. I bought a 3-story walk-up in a largely Hispanic community. It was 6 units. And I really, in my mind, was those top 2 units were massive. So they were almost 2,000 square feet. They were huge. And I thought in this community, this is going to work great. What I didn't think about is carrying groceries up 3 floors. And it was hard to keep those top 2 units filled up. And so that really dinged me. So we were out there doing a lot of work on our own, just trying to keep ends because, again, I didn't really have the reserves, older building. And so, the mentoring is something that's, I think, is very powerful.
Yeah.
How long were you investing before you really found a good mentor?
8 years.
Oh, wow.
Yeah.
Okay.
Yeah. I was kind of an enigma in my peer group to where to be honest, I was ignorant that mentors were out there. I didn't know about seminars. I come from the inner city of Detroit. I just wasn't privy to all of that.
Right.
And so I was just being opportunistic, taking advantage of the possibilities in front of me, but just didn't know that. And as soon as I realized that was a possibility, I was, full on ahead because I knew what I was missing. I was throughput limited based on the fact that I was only as good as the check that I could write. Whenever I had cash trapped in an investment, it inhibited me from being able to pursue other things. And then I knew as far as my knowledge base, I was only as good as I was. And so I'm like, how do I get better? I got to find somebody that knows more than me. Yeah.
The mentor can save you not just money, but a lot of time. And I think we all want to become that big investor, right? Because we're all watching these YouTube videos, we're reading these books and watching these movies about these people that have all this wealth, and we want to go from 0 to 100. But those people all had a path to get there. It didn't happen overnight.
That's right.
And it's like you started, and it took 8 years to find the right mentor. But yet now look at the portfolio you have and the companies that you're buying. The patience is a key. How many, on average, when you were in your second or third year, how many properties did you look at? And maybe you were not going to remember this, but before you actually pulled the trigger on them?
So I think it's unfair to look at the first run without a mentor, only because I didn't even know what a pipeline was or deal flow was, right? So I was looking at very few and pulling the trigger on everyone that I saw, essentially, right? But when I got more sophisticated and got a mentor, I was at my height. I was submitting 30 offers a week at one point. This was in 2015, 16, when there was still a ton of opportunity out there on the other side of the contraction. But so in order to submit 30 offers a week, you got to be looking at 60, 60 deals, maybe 100. And, it really takes that if you want to do volume. But what I will say, for newcomers, that focus on quality over quantity. I know it sounds sexy to say I've done 100 deals, but it is brutal. I can tell you right now, and while don't get me wrong, the money is good and there's upside to it, but the quality of life is some things that you give up in the process of trying to build a machine that big. And so if you can focus on the quality versus the quantity, if you could do 2 or 3 good deals a year versus trying to scale and do 10 or 15, I would encourage that.
Yeah, I completely agree. Have a return that you want and really find properties that meet that return. Is that how you do it?
Yeah, absolutely.
Probably now, right?
Yeah, absolutely.
In the beginning, you just want to do deals. It's addictive, man.
It is. It's
addictive. I can imagine, it's probably low. Are you still finding decent deals out there right now? Are you still flipping?
I'm not flipping anymore.
No.
I'm flipping vicariously through all my students.
Yeah.
And then I'm just buying commercial multifamily, but they're finding great deals on the MLS. You got to put some work in.
Yeah.
And, I've got them sourcing properties otherwise, but 70-80% of their deals are coming from the MLS. It just takes the consistency, working your price reduction during the inspection period. You may have to be a little aggressive on the front end to get it under contract and utilize that inspection period to get it down. So we've been creative in some strategy, but they're finding deals all around the country right now.
Are you guys having to give like the asset that they deposit is liquid right off the bat? Are you guys having to go that far right now?
I think there's only been one case that's happened.
Okay.
There's only been one case. One of my students down in Atlanta, they had to do that.
Okay.
Yeah.
It's, because I think that's a good way to really get, in the game, but you got to be willing to lose that money, right?
Yeah.
So it can be kind of hard to do. Maybe do it after inspections.
Yeah.
Now, where are you seeing, as far as the market that's out there, you're all around the country, right?
Mm-hmm.
Okay. Where are you seeing the best markets for this stuff?
The Midwest for sure. Love the Midwest. The East Coast, there's some good deals over there, and more specifically in the Carolinas, and then some parts of Georgia. Not in Atlanta, but some of the outskirts. There's some good opportunity there. A lot of our West Coast students, very few of them are doing deals like in the California area. Most of them are migrating to the Midwest.
Yeah.
Same is true with our New York students. They're doing the same.
Yeah. I was just in Dallas last week. I was just doing a video the other day that, I was talking to a bunch of investors there. They weren't real estate, but they were in tech or insurance and that kind of stuff. And I said, what do you see the long-term problem here with this growth? Because Dallas it's on fire. Yeah. And they were all traffic, getting into a restaurant. And I said, what about workforce housing? Is workforce housing, you guys, is that something? And their jaw kind of dropped. They're like, yeah, I hadn't thought about that. And it's going to be, coming from California, that's one thing. That's always something we always look at because it's so expensive here, right? And Dallas you're seeing that. And I'm sure Austin, I haven't been down in Austin lately, but from what I'm reading, they're going to have the same problem. In Florida, are you guys seeing that in your area?
Oh, absolutely, man.
Yeah.
It's so much new construction going on down here right now, Joe. It's unbelievable.
Yeah. It's all luxury though, probably, right? Because the cost of the materials are driving it.
Yeah, it put it this way, the pricing is starting to become luxury. I don't know that the materials that they're using are necessarily luxury. But no, you're
Right.
right. That shortage is, I mean, it's having an impact, man. And anybody that doesn't believe inflation is real, they need to take another look because it
Yeah.
is. It's happening right now. If you're going to work every day and you haven't had a pay increase year over year, you're working for less money. It's just a
Yeah.
fact. You're losing
Yeah.
money when
It
you go to work.
definitely is.
Yeah.
But I'm like you. I think real estate is a place to be. I think
Mhm.
you find a good property and treat it like it's a business. That's one thing I want to bring up is in your classes that you're teaching, are you teaching you guys to really run it, or men and women to run it like it's a business? Because so many people just want to invest and bring in a property management company and kind of forget about it. Or what steps are you taking on that aspect of it?
Yeah, we literally take them from, so we have students in 4 countries: Denmark, Japan, Afghanistan, all throughout the states. And the first thing is obviously setting up their infrastructure, making sure they got the asset protection in place. So yeah, absolutely, they need to have a business. They need to set up an LLC. And
Yep.
while they're waiting for that to come back, we don't discourage them to still be aggressive and start submitting offers, because you can always do an addendum
Sure.
before closing. But certainly, they consult with our CPA to make sure that they got a good, tax strategy plan. And then we, take them all through the fundamentals of, how to source the realtors, how to vet them, how to find and vet the contractors, all of the legal documents to hold people accountable. In addition to just how to build solid teams with good infrastructure, checks and
Yeah.
balances, and even going as far as the list agent and how to qualify these individuals, because a lot of people can say they can sell your house, but as you know, Joe, the investor is the last one to get paid. And so you really need to understand everybody's role in the process of you getting a check and making sure that you can hold these people accountable to get their very best, and not just at your expense.
Yeah. Yeah. If you're an investor, you'll find that when you run into real estate agents, you're going to have an immediate friend, because they want that deal.
No
And I
doubt.
am one, so I can talk like that.
Yeah.
So,
I was
um,
licensed in 2009, so I'm right there with you.
okay. Yeah. Yeah.
Yeah.
Yeah. So we're like, okay, maybe there's a deal here. But yeah, I mean, you've got to vet everybody out, make sure you got the right contractor, cleaning crew, everybody needs to be in. And I really think as an investor, I didn't really treat it like it's a business. I mean, I looked at the accounting side of it,
Mm-hmm.
but I wasn't always looking for, when deals that come on sale at Home Depot, is that something I can buy now and put in storage? That going to that level, I didn't do that in the beginning. And now,
Yeah.
as we invest, well, when we were doing multifamily, we've actually sold out of all of our multifamily. We got
Oh,
offers
wow.
on it. We're like, okay, well, we can dispose of these assets and buy again when the market changes or in a different market. But
Yeah.
we really learned to really treat it like a business. And I think as a new investor, that's something they really have to take a look at. And it sounds like you guys are teaching it right on point. So
Yeah. And to that point, Joe, I think on the very close other side of that are those that spend time procrastinating by trying to get their business cards and their website. And
yeah,
so there's a fine line between
yeah,
having your business set up and then not having a business, even with all of these things in place,
yeah,
because without a deal you don't have a business. That's just the reality of it.
yeah. Production. We sit and talk with a lot of our people that we work with, and efficiency is the number one thing. Make sure you're doing everything that's the most efficient to your business, and
Mm-hmm.
then look at your productivity every week. What was accomplished this week, and then set goals for next week. Next week, next month, next year, but productivity. And when you're right, you get mired down in the stuff like the business cards or like the website, and that's just busy work, right? It's not money making.
That's right.
Make the money, do that website stuff and business card stuff, evenings, weekends, but efficiency, productivity.
That's right. That's
I
right.
think
Yeah,
is
we do SMART goals right off the bat, you
yeah,
know, because you got to be able to measure what you're doing.
yeah,
Otherwise, it's just a lot of activity. So you're spot on with that, Joe.
yeah, yeah. You can sit there and tread water all day, but if you aren't getting towards shore, you know, you're going to drown. So,
No
well,
doubt.
Brian, thank you very much for today. This has been absolutely incredible. I'm going to ask you if you can send me the contact information to your iFlip University and
Okay.
your other classes that you do. I'm going to put that down below, and that
Okay.
way everybody can reach out to you. And, thank you for coming on the show today.
That'd be perfect. Thanks for having me, Joe.
You bet. And for those of you watching, if you haven't done so, make sure you go and subscribe and give this video a like.